Hi, good morning. So what I want to talk about today is the stock market. So if you've looked at the US stock market over the last 2 weeks, you would have seen that it has been bearish, like really down. Tech sector anyway, there have been a rotation in sectors, and the tech sectors, which most of those invest in, the Max 7, the the S&P has different components, but the Magnificent Seven, which are mainly tech stocks, software, and Nvidia, which is cheap, and EV has then surged too in terms of alphabet. Then logistics like Amazon, it has actually taken a hit. And so I guess a lot of people, even Bitcoin has taken a hit. I saw a write-up where somebody was like, all these people are always saying buy the dip. At least now they see when the dip keep going deeper. So I want to give my 2 cents on it. For a lot of us that have been in the market for a while, it's not new. It happened in 2020. I don't even think this was as bad as 2020 in terms of stock. Maybe Bitcoin, because it has dropped by 50%. Maybe Bitcoin, but you see stock, it hasn't. It's not that the S&P is not down by maybe 20% or more. So you can't really say it's such a bad bearish market. It is red, especially if your portfolio is tech concentrated. You would have seen the impact. You'd have seen a drop down by, depending on when you enter. If you enter Bitcoin at in the 120s, Bitcoin went to like almost 60K in the week, so you can imagine. So the thing is that it is not new from what I have been observed, at least since I've started the market. In 2020, during the COVID, it was like that. That's the US stock market I'm talking about. In 2022, that was when I had to take a break from the market because of something like this. It's the thing with the US market is which is why it's a good market. Why people do it is because it is very geopolitics imparted. So if the US economy is having issues, or the world economy is having issues, or even something is happening in the world, you will see it in the stock market. It will affect, especially the US stock market. It reacts to things like that. So now when you see Trump going after Iran, Trump going after Venezuela, Israel and Palestine, you see the US, Trump basically going on his own route, that is what is affecting. And then he's putting tariff. Tariff means more cost, more expensive goods to be purchased. It's going to impact people. So those things affect the market, and that's why you're seeing the drop down. For tech, it's basically because the AI boom. So with the AI boom, you see that a lot of people are like, yeah, there's a lot of talk about AI, and a lot of capex, a lot of money is being invested by most of the Max 7 into this AI. And there's this talk that, they've not seen the revenue coming from it. They've not seen, okay, so yeah, I use ChatGPT, you probably use Gemini or something, but people have not been able to see, how do you monetize it? How are you going to get this money you are investing in it, this huge sum of money you're investing in it? How is it going to come out? How are you going to get it back as profit? How are you going to monetize it? And yeah, to a good extent, every individual use it, but now they are looking at enterprise. In terms of businesses, how can ChatGPT be used in businesses to cause sales to boost, to optimize productivity? Although there is a fear that AI might take people's job, that's still a long way to go. So a lot of people are still looking at what have we really been doing with AI in terms of the AI itself. For me, in terms of search and research analysis, AI has been helpful. But as a business, let's say manufacturing business, how are we going to see, are we going to be able to get out profits? Is the impact or value of AI going to be so relevant that the manufacturing company would want to purchase it enough that we would see justification for all the capex that is being spent, because especially investors, you want to look at the long-term profitability of a business. That's why anybody enter most of the time S&P and Max 7. Traders don't do that, but if you're buying Max 7 and S&P, you're looking long-term. So if you're looking long-term, you want to be sure that this company in the long term is going to still be in the market. It's going to still be profitable. And if you're spending large sums of your free cash flow, you're investing it on AI, you want to be sure that the profitability from that AI will justify it, or will justify growth in the future and not affect your balance sheet going forward. And so that hesitant and that fear is costing money to move from the tech sector to, it started with gold, but even this week gold and silver took a hit, because as opposed to when gold used to be a store of value, the safe haven for most people, if you just want to preserve your money, you go buy gold. Well, a lot of people are now buying it. That's the thing with something that is a store of value. When a lot of people are buying gold should usually not see exponential growth. That's why it's a store of value. But when you see gold and silver getting exponential growth, I think silver last year doubled in price. Gold was around 60-something%. People are like, this has become a stock. And when a stock gets to like above exponentially increase or parabolic increase, that the way the market works is going to correct. So most people will take a back seat when a stock has hit a particular return percentage. You want to take a back seat and see what happens, because it means there's going to be a correction very soon, which was what happened with gold. We saw a correction also with Bitcoin. Come on, Bitcoin hit 126, so we are seeing a lot of correction. The geopolitics does not help, because everybody is scared. So most people, when there's fear, when the greed fear index is very high, or the VIX is going up, which is telling us about the fear in the markets, you see people are looking for more stable source of investments, more things that they can guarantee that at least at that point you want to first preserve or guarantee your capital as against return. So that's why you're saying people are pulling funds. They used to go into gold, but now even that is not even happening. So people are rotating to other sector in the stock market. Stock market is still seeing growth. That's why we have not seen significant destruction in the S&P returns, because it has rolled to other sectors like the value sectors, biotech, so we are seeing money pull to that area. So the idea is, for me, the way I believe you should run the stock market is, they tell you that stock market take money from the impatient and give to the patient. Warren Buffett says, buy a good company and hold for long. But there's something I want to add to that. The way I play the market is, when the market is down is when you should be buying. So the market have different sectors. So when a particular sector is taking a hit, that's when you should be buying from that sector. So that when another sector is going, if you had invested when it was down, you'll be taking profits. So now is the best time to buy tech. Not telling you that tech would automatically resolve its issues. It's really down, but are you going to stop using phones in this world? That means Apple phone is going to be relevant. Probably people will still use systems, and these systems or tab will still contain, there's a fear of software being taken over, but that's still a long while ago to come. Do you get? So Microsoft has the money to elevate, and these tech stocks, they're telling you that even if AI comes, we have the money to actually invest in AI to serve as a replacement for our current source of revenue, which means it's a new terrain, so these companies are trying to find their footing. Once they find their footing, that these companies are going to pivot. It's just like when Facebook came, and you wonder how does Facebook make money? But Facebook was able to use marketing to actually make money, advertising and marketing. And today that's a big big income for them. So now the tech is going down is when you should be buying tech. Now, I always speak of portfolio distribution, because the person that is telling you don't buy this deep is actually right. Because if you are going to use your money in the next 3 to 6 months, it's best you don't buy. This is more of investors market. So investors take position in tech now that is going down, because these companies are at discounts. It's like going to the market and seeing products for sale at it's like if you're in Nigeria, it's like harvest season. People will buy food stuff in bulk in harvest season because it's on sale. It's the same thing. Do you get? So you are buying most of these companies why it's on sale, because it's cheap now. And then you look at the years to come, maybe 2 or 3 years, no matter how, do you get? It's good. Some of them even recovered. There were some that took like 10% hits, and then they went back up in 3%, in like 10%, same 10% in like in less than a week. So these are great opportunities, whether for trader or for investors. Now the problem is if you already have a stock in it, because there are different people in the market. There are people that are investors that have been in stocks for a while. There are people that are traders, they just come in and trade. There are people that are new entry. So if you're just entering, that's when you'll be like, this is the perfect time for you to enter and take position. I remember telling somebody to buy Facebook, the last earnings. And that was 3 months ago. When Facebook released, the person was able to get 16%. 16% in 3 months is not that right. 16 times 4. As you're almost getting 64% of your money in a year. Do you get? So that's not so bad to have. So that's the idea you play. Some stocks are down. Microsoft is down now. Amazon took a drawback. A lot of stocks are down now. Even I was waiting for Alphabet to take a drawdown, and it took, and I had to enter because I've been waiting for that. It was not massive, but I was grateful that it even went down. So it's an opportunity to enter now that tech is down. Now, when tech starts rising, or even Bitcoin that is down, it hits 60, which is not bad. I'm not saying buy, because Bitcoin is a bit more risky, because the others, you can see that there are companies selling real products, which you believe their balance sheet and valuation would probably boost them up. With Bitcoin, it's more of speculative. You are not very sure. But I think Bitcoin has stood the test of time, that for me, I believe it will see a rise. It has fallen to over 70 more than 3 times in the last 3 months, but it always rises to, it hits the 90,000 mark again and drop down. So imagine you are trading and you had bought in 70s and you come out in 95. That's something you have made. So why people are calling Bitcoin is down. Somebody said something. He said, if you bought at 125, sell now and enter again. And then, so there are different ways to play it. There are different techniques. But what I want to share is that the idea of the market is when it's red is when you're buying, because it's like harvest season. You buy and stock up. So any sector that is red. So the best way to always get income from the market if you're trading is that when the market is going down, a sector is going down, look for the top players in that sector that are going down, and then buy from them. Then when another sector is green, if you had bought initially, when that sector starts going up, look for another sector that is beating and start buying, then collecting profit from here. That way you are always not moved. That's why they say cash should always be a position in your portfolio, because you need money sometimes to do things. If you don't have money, like I had to sit down and just watch the market for the last 3 months, because I didn't have so much money. Now, at least money that I would not need in the short term, that would not affect my bills. So that's another thing, portfolio distribution. If you're a full-time trader or investor, you want to make sure that you use fixed income as a way to get your source of income, your recurring bills. That way, that gives you free hands to actually, whatever amount you have, you can play it on the market and play it sustainably. If you need to wait a bit, you wait and you are not under pressure. You might ease off in the market, you might come in, but that with or without the market, your your recurring bills are still getting paid, so that you don't sell at a loss, or you don't sell, you might lose a lot of money. Imagine somebody that bought 125 for Bitcoin, and when it went 50, you will lose 50% of your money. And if you're in Nigeria and you're dealing with dollars, and FX is right now, Naira is appreciating against the dollar, so you are losing on both sides. So you want to make sure that you are playing this thing very smart, because if you are not very smart, you will think you're making money, but you're losing money. So this is the best time to buy into tech, strong companies in tech, that that their products are not going anywhere. Their services and products are something you still use, and you will continue to use. There are no alternative yet. There's a talk about China alternative, but I don't know how many people are using the China alternative. I don't even know how many is in the market yet. Until we get there, then you can sort it out. But then, it's better to play what the devil than to be aiming for. You're an emerging company, you're from an emerging country, and you're also an investor. Your own is now to become a superpower. Let them play their geopolitics and do their superpower. Yours is to play the markets and make money out of it. So when tech starts going up, you can look for maybe biotech sector, and you can look for financial sector, you can look for industrial goods. I heard that industrial goods really did well. I heard that the Dow Jones hit 50K for the first time, and there was a lot of celebration. So why people are crying that the market is going down, there are actually other sectors where they are booming, where if you are taking position initially when it was down, you probably have been making beautiful returns now. So something is always happening in the markets, and people are always making money, and there's always opportunity, no matter how bad. Even if you are down right now, what's the strategy? Somebody have said buy and sell out. Another way is if you have spare money, you can look at other sectors that are going down that you don't have their stock. Use it to offset the losses in other sector, and then come out, and so you even. These are practical steps that we ourselves are also using so that we stay relevant. But core thing, always make sure that your portfolio is properly distributed amongst different assets, fixed income, real estate, and then stocks, so that if one sector is taking a hit, that the other sector can sustain you for the time being and not make you do distress sales on any of your assets. So thank you very much. Have a lovely week. I hope this video makes sense to you, I guess. Bye.
If you found this video interesting and will like to learn more, contact us on Instagram at Magda Premier Innovations Limited, or WhatsApp at 0816 029 7117.